Our market monitor guest tonight says U.S. equity markets will post mid-single-digit returns in 2014, and he expects international markets to do considerably better. He's Wasif Latif, Vice President of Equity Investments at USAA Investments. Wasif, welcome. Good to have you with us.
Thank you, Tyler.
Why do you think the U.S. market will have comparatively a very modest gaining year in 2014?
Well, you've been on a tear on the equity markets, particularly in the U.S. The returns have been so strong for quite a while. As your earlier guest pointed out as well, a pullback may be in order, but that may also reflect a reduction, a gradual reduction in the quantitative easing or the bond buying program. And so we think that given all the factors, especially the fact that the profit margins of U.S. companies are at all-time highs, that makes for a mix where the returns going forward for next year, for this year, are likely to be tepid, whereas on the U.S. non-U.S. side, outside the country, you're likely to see slightly better results because the margins are lower, there's more room for upside on those margins, and the valuations are more attractive.
Valuations are better. That doesn't mean, though, Wasif, that you don't have some choices that you'd like to share with our viewers tonight. Why don't we start with your first one, which is Gilead. Tell us what is going to drive that stock to better gains this year.
Well, as you know, Gilead, the biotech firm, has two specialty drugs among a lot of the other ones that they have. But the key ones that has really been driving the stock is their HIV drug, as well as the new one that they have created for hepatitis C. And the early test results for that hepatitis C drug are very, very positive. And that's an untapped market if you look at the U.S. market. There's about 4 million folks estimated in the country to have hepatitis C. Mm-hmm. So that creates a pretty big market for them. And that's just the U.S. That's not to mention the global market potential out there. So it's a pretty good growth story. The stock has run in 2013, but we think there's more room for upside there.
Let's try and get these next three in. You go old school with your next pick, Occidental Petroleum.
Yeah, the others are more stodgy, they're more staid and steady, and it really is a reflection of a look at the market to say you need to be a bit more cautious and picky and choosy. So Oxy is a company with attractive valuations. There's a restructuring story there where they've been trying to sell their non-U.S. assets and some of the assets in California. And we think those assets create a lot of cash flow that's going to come in to help pay down debt or buy back shares. Mm-hmm. And they have a good dividend with an increase to boot.
Let's get 2 for 1 here. Give me 20 seconds on your final two picks, Cisco Systems and Microsoft.
Well, these are the old technology companies. They're not the new ones, but they're the old ones, and they're good value stories. They're both attractively valued, and they both pay a good dividend. They have a lot of cash flow business that continues to generate all of that cash flow, and the dividend is steadily growing as well.
What do you think will happen with Microsoft when they get a new CEO? Does it depend all on the CEO? Quick thought.
Not necessarily. Obviously, there will be a quick reaction from the market, but it doesn't necessarily mean that the stock's long-term trajectory is based on whoever the immediate CEO will be.
Do you have any disclosures on the stocks you just mentioned? Do you own them? Your company owns them, I assume?
Well, we own them in our funds. The ones that I manage, we own those stocks in our funds, yes.
All right, Wasif, thank you very much. Wasif Latif is Vice President of Equity Investments at USAA Investments.